everyone, this is Evan from the Trade Risk here on Friday, March 18th with a weekend market recap video. We are first going to analyze the current market environment. We're going to look at some other markets, sector analysis, individual names, and then I have some weekly charts for us to look at in spirit of the end of the week. So I'll bring those to you at the end of the video. Now, real quick before we get into things, I want to remind everyone once again, webinar is going down next Tuesday, March 22nd, 5 p.m. Eastern Time, thetraderisk.com/webinar. For more information, drop your email there. It's a free event, or click this link in the top right-hand corner. Sign up. I hope to see you there. I've gotten a lot of sign-ups so far, so do check that out if you haven't already. Now, this week, markets continued their rally higher. The S&P 500 closing up over 1%, 1.35%, using the cash market because we had the SPY go ex-dividend. Looks a little more pessimistic than it really does. Looking 80 basis point move as opposed to the cash that's showing the true 1.35% move that we did see here in the S&P 500. So we had a few things happen this week. We had the Federal Reserve out on their FOMC statement, and we also had quadruple witching for all you options players out there. So we had a couple of different catalysts for the market. Clearly didn't really influence. The trend still remains higher. We continue to grind higher amongst sort of overbought conditions, and the pessimism still seems to be there as we kind of move along. We'll look at the SPY, but just do note that we really did close higher today. It's not the 12 basis point close lower that you're seeing on my chart here. But again, I think what really helped this week. Let's rewind a little bit. Last Friday, this was how we closed the week, and this was once again running pretty strong, pretty hot, heading into an announcement like we were going to have this week on Wednesday with the Fed out. That was going to be worrisome is just moving into that event if we just were to keep ripping higher. But we did see, again, that 2 days of digestion here, Monday and Tuesday, that did seem to reset sort of a lot of those stretched conditions by moving sideways, and that ultimately paved the way for us to actually make a move off of the statement from the Fed on Wednesday. That was constructive. So the market continues to just behave very good technically, right? It's continuing to grind higher, but just like we saw a couple of weeks ago here, it worked off those very overbought conditions, and then it broke out higher, worked off those conditions, broke out higher, and again, this 8-period EMA is just trailing price up the entire way. So everything technically looking good here. The trend is still intact. Sentiment seems to still be more or less against this move higher than anything else, and I think you still have everything in place to continue to rip higher. Now, again, as the more we accelerate, the more likelihood that this band eventually starts to come back in and recover a little bit, but it's just not enough to fight it on its own. You have to be participating in these types of moves, otherwise you're going to get left behind. So admittedly, we did a lot of selling today on Friday here. We reduced a lot of exposure in our short-term kind of swings that we had on. Most of them were energy related. The oils had a big move. We got rid of some names there. We also did we did buy another name. So we're still again rotating in and out of names. I think that's what you have to do, and it's continued to work for us. We've had a great March so far. We'll get into some of those names later in this video, but for now, it's pretty much the same song and dance. We're continuing higher. There's not too much to say otherwise. We are, a little overbought again, but as we just discussed, it's not a reason alone not to participate. I think 205, we'll have to see if we can get above there. That's, seems to have some hesitation here. We're seeing that. So price definitely has some hesitation, some memory up there. And then 208, I think, would be the next bigger level. This has played a role in the past going back to early 2015. It's held as support a bunch of times. It's been some pivot highs here in late 2015. So I think 208 would be a big target, but again, that's still another 3 points above us. We'll have to see if we get there. You can see these the fast moving averages still very much in bullish alignment. The trend is steep, so again, until we start breaking support, which in my mind would be, start with the previous day's lows and then really, back below 201.50 where we had this kind of multi-day pullback. Once the market gets back below there, that's when you can start to really start to adjust your stance. Otherwise, I think you have to look at this market glass half full. If we look at, especially now when we look at the IWM, you can see this really started to outperform today, taking out these previous highs, getting back above a very critical level. I think this is very important, and it looks like it did it almost effortlessly. We discussed how the IWM ran right into this level. It pulled back, again, behaving technically just as you would expect and want to see, and it went sideways for a full week. This is really healthy. This was your digestion in here. I know some maybe were looking for more digestion or more of a retracement, but this is very orderly. This is what I would consider, in some of the strongest trends. This is the healthy kind of digestion action. We saw a nice move here on Thursday and then follow through on Friday. This looks good. New highs here in this trend, and then the Qs still a little bit sluggish. It's been interesting that this group here, some of the high growth names have been a little bit sluggish, but they're still stair-stepping higher. It's still getting a little noticeable though that it's not ripping higher. We're not being led by this sector by any means, right? It's been a rotation into materials, industrials, other things that don't really fall under the Qs. So keep that in mind. I still think this is an interesting index to watch just because it does seem to be lagging the most, and getting. I think this, if we do start to see cracks, you're probably going to see it here first. So keep an eye on 106, getting back below this support. That I think would be maybe cues that the rest of the market, the SPY, the IWM might be there to follow. But again, still above bullish alignment, marching higher. So again, it's not a very bearish scenario. Now let's look at some other markets. TLT held the support back here off of that Fed news, off of Fed day. It's holding support. I think it's range bound right in here in the context of an uptrend. I think you need to respect that until it starts to break below 127.50. That's your action area. Otherwise, I think you can either trade against it or just sit tight and wait for something else to develop there. Gold, again, this one had a nice move here off the Fed day as well. It's back below. I'll probably take out this trend line here, but I think staying above certainly 119, I think that's an important level, and then certainly 117.50 or so. You still have these highs up here, so it's just consolidating. It's healthy action. Let it do its thing. It could need another week or so before it starts to really want to move. Silver, this broke below our $15 level. This looks good. Take a look at the weekly chart. We've discussed this at length right now. This nice downtrend line here has been broken. This was one of the trade ideas that I put out in the newsletter. I like silver. This looks good. 1450, that's a level back below 1490 or so, getting back below there. Start to get a little more. Maybe it's not ready yet, but so far so good. The metals looking pretty nice all around. USO finally saw a little bit of a close on the lows here. We haven't seen that. Even in this pullback here, you can see that the buyers stepped in and drove prices off those lows despite the 2-day pullback here. Finally today though, you actually saw a close on the lows, so we'll have to see. Maybe it's tired here. I mean, it's had a hell of a move for sure, retesting sort of this little old range that we had back in late 2015, so maybe it's due for a rest. Maybe it needs to come back down here into this 960 upper 9 level and just kind of trade sideways for a little bit, but keep an eye on it. I mean, still looks good again on this trend on the daily time frame. It is working itself higher, and of course this is in the context of a long-term downtrend in USO. UNG likewise continues to work itself higher. Had a tough day on Friday, but you can see it's been just levitating higher. You can see the fast moving averages now very neutral, indecisive standpoint, but the bulls are getting it done here. So let's just see how this one certainly needs more time for a more actionable setup, but for now at least there's some signs of life down here for natural gas. Now if we look at some of the sector analysis, I think industrials definitely outperforming this week, looking real strong, taking out the prior pivot here back from 2015 in November. So that's a new close here, going back multiple months, taking out this old resistance. That's very constructive. Again, that's off the heels of the dollar. Let's take a look at the dollar real quick, because we didn't look at it. It was a little bit higher on Friday, but you can see on the week it was down 1.24%, and it's coming back down to some very important support here. And this is a very important level to watch, especially if you're in those commodity trades or some of the material sectors. Some of those sectors heavily influenced by the value of the dollar there. So keep an eye on this. Had a big sell-off this week. That's influencing a lot. Get back to the sector analysis. Industrials, very strong. That's looking good. Semiconductors also starting to rip higher here, especially on Friday, 1.27% up day. Look at these last three bars, Friday, Thursday, Wednesday. That's some nice, strong-looking buyers stepping in there. So keep an eye on the semis. Still in a very neutral sideways pattern in the bigger picture, but recently they've had a nice run. The technology sector, this is still holding up pretty well, coming back to these recent highs here. So again, probably some hesitation as we start to get back up to here into the $44 level. And then finally, materials, like we discussed. Weekly chart, this probably has you a little bit concerned though. It's had a straight line V-shaped all the way up to into this resistance. So I'd expect some hesitation here at the highs, $46 or so. Materials might start to cool off, maybe some rotation into some other sectors. Keep an eye on that next week. Now, getting into some individual names, we'll start with Facebook, which is now holding above 110. That is constructive. Didn't do much on Friday, but as long as it's above 110, I'd say you get the complete green light here that this thing can trade higher. Below that, you have some support down here at 108. So you're starting to build multiple levels of support below price again. That's healthy action. I like Facebook. Looks good for higher prices. Netflix getting some work done by the bulls here this week as well, taking out 99.50, taking out this $100 level, closing above it. That's constructive. Weekly time frame, you can see it's had a nice move up off those lows. It went sideways for a week or so, and it's trying to get back going again. So keep an eye on this. There's a lot of supply right to the left of here, right around $100, but getting back into this range ultimately would be very constructive for Netflix. So keep an eye on that going forward. Short term trend is higher. I like it. Amazon, kind of the opposite story. I know there was news out on I think there's been a lot of different news out on Amazon. Perhaps AWS isn't the only game in town for a lot of these cloud-based infrastructures. So Amazon a little bit weak here, 1.3% down day on Friday, heading back into some support here. This will be an interesting level. It's pretty vulnerable here if it starts to lose 550. Just given how markets, when you have a V-shaped rally like this, there's not a whole lot of supply in previous price memory immediately anyway that can kind of cling on to price and perhaps support it. So just be careful. 550 below there. Maybe it's an actionable short if you're looking for that short. And again, kind of on that theme on the Qs. Well, maybe if the Qs start to roll over, maybe Amazon is your first look. Just an idea heading into next week. And then finally, Alibaba, which is performing well. We discussed this level, $72, $73, $72.50. It got above there. It's trending higher. This looks good. Trying to confirm this sort of double bottom in the longer term play. Alibaba looks good in the short term. Stay with it if you're in it. Now, some names to have on watch. Looking at the weekly charts here, it's the end of the week, so I figured why not spend some time looking at weekly charts. Probably going to be more of a theme going forward in these videos on Fridays. NOC, take a look at this here. It's been basing out high and tight, making a nice move, closing at 194, all-time high close here in NOC. This looks good for you longer-term players. LMT, another one, defensive industrial sector that's been hot, 220, closing highest closed since late 2015, back in November here. So this looks good, trying to emerge out of a base that's pretty actionable there. DAL, airlines play. This is Delta. You can see trying to clear back above 50. It closed above 50. Got this little trend line that was coming down, some horizontal resistance. It's trying to break breakthrough. So keep this one on watch, looking pretty good. SEAS, I don't love this one as much, but it did make an impressive 15% move. I think getting back above 20 or so is when it starts to really shine. So see if we can find continuation there. A lot of these previous breakouts just lead to rejection pretty quick. So let's see if we can finally get some follow through above $20. Hasn't been through there since mid 2015. And then finally BCR. BCR making a nice close today, above 196.50. You can see it's high and tight in here in this little flag that it developed. I like the look of this. Pretty actionable name. Don't like the sector so much, but perhaps we see some rotation into healthcare. Maybe it finally starts to see some money attract to it, but so far I don't really like that sector. So hopefully those ideas are pretty actionable for you. Those are the types of names and ideas we look at all the time, those tight patterns emerging from healthy bases on multiple time frames. If that's something that interests you, check out the premium page on thetraderisk.com. A nice little plug there. Otherwise, what I really want you to check out is the webinar next Tuesday, March 22nd. And again, thank you for watching, and I will catch you guys next time.